Hello everyone. Happy New Year. First, I have an announcement that I will be active in 2025 and we will be trading both the day trading and the swing trading. And for this purpose, I have created the swing trading channel as well. Now we do some current week analysis and see that if there were any opportunities this week. And by the way, I will be keep recording the weekly analysis by next week and I will keep posting the levels as well. So let's kill the 2025. This week we are inside bar of this big bar. You see, these two bars are inside bar. So actually when this week was started, what was our first major level? This one. So actually we should be marking this level that if this week the price comes here, we will not sell directly from this level, but we will be looking for the confirmation entries because this is a full week price action and maybe 2-3 days it needs to reach here, and this will be the bull trend. And of course that if we have the bull trend like this, we have to fade that bull trend before go lower. So that's why this will be the bull trend on the lower time frames. A lower time frame because this is a weekly time frame, even the daily or H4 time frame we will be the bullish uh, here the bullish scenarios. And now you see that this full week we don't have any big price action and we never reached here, so this level was still intact. And secondly, if you see that we have the 8 EMA, and you'll see that this is the 8 EMA, this is the 21 EMA, 50 SMA and 200 SMA. So this level also we need to keep watching. So for example, if the price goes higher, we will be looking for this level to reject, just like here, you see. So I'm not saying that we will directly sell here or sell here, but this is the potential level also. And this level is too far, the previous week low, I mean the previous week high. So that's why we don't need to mark. If we really reach here, then we will mark this level also. So you don't clutter your charts with a lot of levels, just mark the most relevant and closest level. So this full week we never have reached here, and then this level was intact, and the next week this level was intact but also the previous week high. So this is the most relevant level first. If we break this level, then we will be looking for this level and then subsequently the 8 EMA, and this is a weekly time frame. So we opened here. Let's check this one. This is the weekly open, and this is what previous week high. So if we opened here, we check that how the price reached here, and if the price reached here, how we will be looking for sell, because this is the bull trend on the lower time frame, and how we can fade this bull trend, because previous week high is also a very strong level. It is not necessarily the price need to reach here or even here. The first level we will see that the price reached to the first level, we are looking for rejection, but of course it could continue. We will wait for the bull trend to fade out first. So then we see on the daily time frame what we have on the daily time frame. Where are the drawings? Okay, so on the daily time frame we see that this is the weekly open, right? And we had higher, and this is the previous week high. So we need to check this one. And by the way, previous week high and the previous day high is almost at the same level. So this level is very strong, and this is the daily 21 EMA. So this level is also we need to keep an eye. Maybe the price can reach here, or maybe it just before from here it just reject. But if it reaches here also it can reject something like this. So we can see that the downtrending 21 EMA. So we have this level and we have this level to keep an eye. Okay, and then we go on the H4 time frame to check from here how the price went higher. Okay, so this is the weekly open and we reached here. Okay, so this is the bull trend. We will check this trend on the 15-minute time frame. Okay, so on the 15-minute time frame you see that this is the bull trend, which I said we never know that it could continue also. We need this bull trend to fade first. And how we will fade? Look here. First we will check the structure. So what structure we have? Basically we are bearish. You see that this is the high, this is the range low, QM, and basically this is the range, but this range is too big. So when the range becomes too big it becomes irrelevant. So that's why still this is a strong high, but why I say it becomes irrelevant, because there is a lot of price action here. If this is the case, what we do, once the price disrespects the DOB, what we do, we check the internal range. Okay, and in this case if you see we have the low, high, higher low, higher high, right, and then higher low and higher high, and this higher high is basically going here. So basically we are in the bullish range from here to here, and once the price takes out this low, we are bearish. But since this low is really too far, we can check this on the 3-minute time frame. If the 3-minute time frame strong low is taken out, maybe we can expect that this level is rejecting. And now we check the 3-minute time frame. So on the 3-minute time frame, if you see that this is a weekly open and this is a low, high, low and high. So this is the strong low on the 3-minute time frame. So if this strong low is taken out, then we have a new range on the lower time frame from here to here, and we will be selling into here, something like this. And on the lower time frame, maybe on the 1-minute time frame, we will have another range, because this 3-minute strong low is taken out. But this could be a still very aggressive, which I usually don't do. So what I wait for? I wait for this trend to fade. And how this trend fade? You see that this is the bullish trend now. Now we are in the bullish trend. I show here. Look here. We are longer term bullish, but we are at the previous week high. So if this low is taken out, we are looking for sell. But also I want to see at least shorter term bearish, and then subsequently the longer term bearish based on these moving averages. Why? Because we have the bullish trend. So in this case, now the low is taken out. So this is a strong low on the 3-minute time frame is taken out. But we are still bullish. And now you see that this pullback, a lot of people, they go long again, maybe from here or whatever they have the POI. So they go long here. So if this bullish trend fades, we can sell, because this is the final piece from here to here. This is one bullish leg, by the way, from here to here and then from here to here, and this is the change of character. And now after change of character, basically we will have another range, but the on the 3-minute time frame the range is not developed, right? But on the 1-minute time frame it could be. So on the 1-minute time frame maybe someone is selling here, but most likely on this time frame maybe they are still buying. Why? Because this is a 15-minute QM. Can you see that? So below the 15-minute QM, what you have? The 15-minute decisional order block. So from the decisional order block, what you are looking for? Another high. So that's why this is potentially a bullish trade rather than a bearish trade. But at the same time, you need to be careful on the bullish side. Why? Because you are at the previous week high. So that's why this area is very important for you to think about carefully. You want to go long or you want to go short. So that's why this is very risky area. So because based on the 15-minute time frame, like I said, from the DOB, if you buy, it is 100% a buy trade. But because of the previous week high, you need to be careful, right? So we need to fade this leg now. In this case, what we are looking for. And by the way, this leg is on the 15-minute time frame is this one. The price comes at the 21 and bouncing, just like here. Price comes here and bouncing, and what it did, it made a new high. So it is just the continuation. So if from here it makes a new high, it is just a continuation, and we will be on the buy side until the next level. But if this leg fails, then we are looking for the price to reach to the 21, 50 and subsequently 200. So that's why on the 3-minute time frame we need to fade this leg now. Okay, so okay, so you see on the 3-minute time frame the short term bearish has triggered. Why? Because this leg, this was the pullback on the 15-minute time frame, is faded. So this was the crossback, and this crossback is triggered. Okay, and now we are looking for sell. But how we will sell? We want to see a pivot, because every sell we want to see a pivot. So in this case we are waiting for the pivot, and finally we got the pivot. So what is the pivot? The pivot is 3 candle formation, right? Low, lower low and higher low, right? So this is the 3 candle formation. So whenever we have the 3 candle formation, we got the pivot. Now we need to fade these bullish guys. If we fade them, why? Because we are short term bearish. If we fade them, we can sell. So I will have the 2 orders here. One order I will put here. This is the limit order, by the way. If the price reaches here, my order will automatically trigger, and my stop loss will be something like this. above the 50. I don't need this one, just above the 50, somewhere here is okay. And 200, it's like almost a 3-hour trade. The first I will be looking for this one, and then I will see that okay, how I can manage the trade. This is my first order. But secondly, who knows the price reaches here or not? In that case, sometime the price will reach here and directly maybe just one candle, a big candle, come and just continue and never give me the opportunity to enter. So I will have one order here, the other order I have here. So from here, if the price comes here, in this case, this high will be my stop loss, and then a minimum 3 to 4 or something like this I will be looking for. But once the order confirmed, then I will see that okay, what my target will be. Okay, so I will have to order something like this, but this is the bullish trend. So if it reaches there is very good. If it doesn't reach on the lower time frame, I want to fade them, this bullish trend. So you see that on the lower time frame we are at the 21 and we check. Okay, so now we are here, we are rejecting the 21. Okay, this order is triggered. So if this order is triggered, I think above the 21 I can put the stop loss, and I will just remove this order because I think that that stop loss is too far. A little bit here is okay, 5 pips, because if the price needs to reach here, it need to break this level and this level, and then it needs to go there. And if price reaches there, automatically it most likely it will reach there also. So that's why I think the trade will become invalidated automatically if the price breaks out this level. Okay, and now I can say okay, I have the 4R, and now I can see the trade. Okay, now we are triggered longer term bearish. Why? Because before we have the shorter term bearish, and now the 50 also crossed below the 200. And there we go. So now you can manage your trade according to the previous candle. Whenever the previous candle high is taken out, you just close your trade. So let's say you have the order here, this was your stop loss. Okay, and once you got this candle open, this is your stop loss. Now this candle is opened, your stop loss is above this candle. Okay, and now your stop loss is above this candle. Now your stop loss is above this candle. Okay, and here's your stop loss. Here is your stop loss, and there we go, the stop loss is hit. So actually this looks like the 9-hour trade if you just manage it correctly. Okay, and this trade came from where? Let's review this trade again. On the 15-minute time frame, this was the opening price, the weekly, and we reached to the previous week high. And from this one, maybe the price can continue going higher, we never know. But if the price takes out the 3-minute strong low, That's where we think that okay, previous week high has turned into weak or manipulation. Okay, and now we are looking for the continuation move. And then on, okay, now first we need to check the previous week high, we checked, and then the low is taken out, we checked, that is the second check. The third check is based on the moving averages. We waited for the short term bearish. The 3 minute is still short term bearish. Then the 1 minute we got the longer term bearish. How we entered, we checked everything on the 1 minute time frame. And how we entered, basically we entered on the 3 minute. This was the entry here when it triggered here, or our entry will be here if the price goes there, and then stop loss there, or we enter here and stop loss is somewhere here. If you want, you can put the stop loss there too, it depends on you, but for me I don't think so. We should cover up this high. Why? Because if the 1 minute 21 is taken out, then most likely the price will take this high also. Okay, so automatically 21 is our you can say the line in the sand. Okay, so this is how you can find your one trade, and this is a very high probability trade. Okay, now we check the other price action. So we go back on the 15-minute time frame. On the 15-minute time frame, we check what is our structure. So our structure is still the low is not taken out, like on the 15-minute time frame this was the range, but internal range or internal structure was here. So you see that this internal structure is taken out. Even we don't have the valid breakup structure. Why? Because the price never closed below. You see that, never closed below, and then below this week never closed below, and this week also never closed below, and this one closed below this one. So this is actually the change of character on the 15-minute time frame. 3-minute time frame change of character was here. Okay, so but we still get this level, right? And now from here, any pullback, we are looking for sell rather than to go here. Why? Because on the moving averages we are longer term bearish. Okay, so once we switch here and we reach, this is a switch, means switch bullish, short term bullish. Until here we were longer term bearish. Why? Because 200 is here, 50 is here, 21 is here. So once the 21 cleared the 50, then we will say that the short term bullish is triggered. So once we have the short term bullish, and this is where the the 15-minute time frame the price is rejecting. So now this level and this level, we will treat them the same way. And how we will treat them? Look, on the 3-minute time frame we check again. So if we go on the 3-minute time frame, where is our strong low? These are our ranges, right? The bullish ranges. But this is the strong low. Okay, but before, if before the strong low we turned bearish, then we are expecting that this strong low will be taken out, and subsequently this low will also be taken out. Okay, so in this case, how we will do? We will do the same way what we did before. So for example, on the 15-minute time frame, look here, and remember the same thing. I will do this exercise over and over and over, then automatically you will understand. I think this first day when you are checking this system, with the moving averages as well, maybe it could be a little bit overwhelming for you, but later on you will see that how strong this system is. So we are going to do the same thing. Look here, we faded this rally. Why? Because we are expecting that from the previous week high we are looking for the rejection. If it rejects, if it takes high, it will just keep moving higher. That's why we are not selling here, and even we are not buying here somewhere, because this is the money spot where we are looking for sell, but others they are looking for buy. So when on one time frame you are looking for buy, or the other time frame someone is looking for sell, basically that is the money spot. And I will explain this topic also in some future videos, what exactly is the money spot. But for now I just tell you that this is the money spot area. So similarly we have the money spot here as well. Why? Because on this is the bullish trend. So for someone this is bullish, so they are looking for buy here. Once the price reach here on this POI, they are looking for buy, because they are using this structure and they are looking for buy here. But for us, we are looking for sell. Why? Because our structure is from here to here, and we are pulling back and we reach to the 200, and from here we are looking for sell. So that's why if the price keep moving higher, we have no entry. Okay, so then we will look into this area again if we can sell on the confirmation entry, but otherwise we don't have any entry if we keep moving higher. But if we reject from here, then we will have the entry. So what was the point? The point was, look here, this was the first rally which we, after this level we reached to this level, we rejected, and first rally we want to fade out. Okay, similarly the same concept, we reached here, we are rejecting, and this is the first rally. Okay, and by the way, you can argue this rally also, because from here we are rejecting and this rally. Okay, and this rally faded out. Rather than to go further higher, it just failed, and then we have another rally. We want to fade this rally, and subsequently we want to fade this rally. So what the point I'm establishing here, don't blindly just the price reach to some POI buy or sell. Please, you need to fade out the buyers if you want to sell, or if you want to buy, you need to fade out the sellers. Until you will not fade out them, you are just doing gambling, because you never know where the price exactly will draw. Maybe it will just keep going higher and higher and higher. So that's why you see that this rally is faded out, and this rally we want to fade out, and this rally we want to fade out. Similarly this rally, you will be thinking, is it rally? Yes, it is. On the lower time frame it is rally, we want to fade out. This rally we want to fade out, and similarly this rally we want to fade out, but we never know that where we will find our entry. So that's why we will wait for the 3-minute time frame to check that where exactly our entry is. So this is the second rally, right? And we want to fade them out. So what we were looking on the 15-minute, now we are looking the same thing on the 3-minute. On the 3-minute we want to fade out this rally, right? This rally on the lower time frame is basically the crossback. So once the price took this low, we can say that this rally is fade out. But will we sell here? Even this rally fade out? No, we will not sell. Why? Because 50 is still above the 200, and it is expected that if the price come here, it can go back. Maybe it can continue, but we never know. So that's why this is very risky if we sell here, because here we have the spot. Okay, so we wait. and then we got another rally. Can you see? We got another rally. So from here, and in fact, if you see that we are doing nothing, we are just making the low, lower high, lower low, lower high, lower low, lower high, and this is inside the structure. But actually what is happening, the market is just making the lower lows and lower highs. So every lower highs rally we want to fade, and we will find the most potential area to sell. So this is not the best sell, and by now if you are expert in trading, you should know that why this is not a good sell. Okay, and if you don't know, I will explain in future videos. And now we got this rally, so we will sell here. No, we want to fade this rally, and we never faded out, but in the middle we got another rally. So if this rally also here, look, and now this rally is faded out, do you think that this sell and this sell is same? No. Now we are even below the 200, and we don't have any support here. But look here, 200 was the support line, so that's why selling here or selling here, there is a huge difference. Now you can sell. So how you will sell here? Just like before, I told you that your order will be here, and stop loss is above the 50. And now you can target this low here. So it's the 5-hour trade. Okay, and in the meanwhile, you see that you got another rally. If you want to add into the trade, what's wrong? This is another rally. Okay, so if you want to add into the trade, you can add here again, and stop loss is here. Now if the stop loss is here, in this case you entered into the doubled size positions. Just imagine if you entered here on this rally, and your stop loss is, now your two positions the stop loss is at the same point, right? And this stop loss also moved here. Now what you have the zero risk, because now first trade is in profit, and second trade, if it goes to the stop loss, then it is a losing trade. But first trade profit is also is at the break even, right? So in this case, if the first is in the break even and second is you are losing, in this case you are losing only 1 hour, but in this case now you are in two trades. Okay, and you doubled up your position, and now you just keep moving. And how long you can, until here. Okay, so in this case, if you see that the first trade is what is the risk to reward? This trade was, risk to reward was like, I think 4 hour or something, and the second trade is what, you have another 4 hour. So you see that this is a 8-hour trade. Okay, and you just close here, and then this rally also, if you want to fade this rally, you can fade this rally again. Okay, and then you can find another entry into this area. Or if you are not expert in this system yet, I will be entering here on this candle, and stop loss is here. But if you are not expert in this one, then maybe you are entering here and stop loss is above the 21, and then you can find another trade. But in reality, these are all ranges. So I'm not teaching you anything new, or you can say that, oh, I'm teaching you maybe a new system. Nothing, everything is 100% same. You can see that. What's that? You see that low, lower high, lower low and lower high. So this lower high is rejecting from where? From the 50, and once you entered here, this is your first area, right? And then is continuation. So basically these are all ranges, because if you enter here, this is the high which you want to be protected, right? And so that's why your stop loss is above this one. If you enter here, your stop loss is about here somewhere, okay, above the 21. So this is how you can find your trades. And there, and I don't see any further trade here, by the way. Here is also, I just saw, I think the market is closed already, but I will be looking for another trade into here. Why? Because this is the switch. We got the shorter term bullish to longer term bearish again. So I will be looking for another trade here. But now the market is already closed. And by the way, this is also the dead hours. So these are the best trades. And here is also. So this is the review, and I think the video is too long this time. Next time I will try to make the short videos, and I will explain this whole system one by one in the videos, because you have to mark the ranges, but you have to understand the moving averages to be on the right side of the market. Just imagine that who is buying here, who is buying here, who is buying here. Every time, whenever you buy, every time you buy, you see, you are rejecting. So who will be buying here? In fact, you should, every rally you should be a seller. Every rally you should be a seller. Why? Because on the 15-minute time frame, like I said, every rally we want to short. Every rally we want to short. Why? Because we are the longer term bearish. Okay, so if we are longer term bearish, why we will be looking for the bullish trades? So that's why these moving averages will always keep us on the right track, on the right bias. And ranges, of course, they are the main system what we use. And ranges you need to keep marking. And like we are selling here, but you see that we have, on that time frame, we have the range there, and we are selling, not selling blindly just based on the moving averages. We will keep checking the ranges plus the moving averages. Okay, thank you.